Happy Monday, everybody. Today is April 20th, 2026, and this is your Monday market update. Now, hope you had a great weekend. Last week was one of those stretches where markets didn't just react to the news, they actually anticipated the outcome, and that distinction does matter. So let's recap last week's market and let's preview the week ahead. As trading got underway to start the week, on Monday, markets staged a strong comeback even after a weekend breakdown in U.S.-Iran negotiations. What mattered more to investors wasn't the fact that the talks actually failed. It was the fact that communication was still happening. That reduced the probability of a worst-case escalation scenario, and stocks responded accordingly. The Dow was up about 0.75%, S&P up about 1%, and the Nasdaq was up about 1.25%. On Tuesday, momentum continued as optimism around renewed negotiations and cooler than expected inflation data helped to fuel a broad-based rally. Oil pulled back meaningfully, and that easing in energy markets did help to calm inflation concerns, while earnings, particularly from large banks, came in solid and supportive. The Dow was up about 0.2%, S&P up about 1.25%, and the Nasdaq was up about 2%. By Wednesday, the rally began to look more like a surge. The S&P 500 pushed towards record highs, supported by continued geopolitical optimism, strong earnings, and better than expected economic data. But importantly, not all markets were confirming this move. Treasury yields remained elevated, and oil prices were still well above pre-conflict levels, suggesting a more cautious undertone beneath the surface. Now, the Dow was down about 0.25%, the S&P up about 0.75%, the Nasdaq was up about 1.5%. On Thursday, markets continued higher with the S&P 500 breaking above 7,000. The speed of this rally, more than a 10% move in just a couple of weeks, is historically notable. And as many are pointing out, rallies that move this quickly without any consolidation can be more vulnerable to reversals. The Dow was up about 0.25%, S&P up about 0.25%, and the Nasdaq was up about 0.33%. Then on Friday, markets closed out the week with conviction. News of a ceasefire and the reopening of the Straits of Hormuz helped to remove a major overhang, sending oil prices sharply lower and equity higher across the board. Risk appetite returned in a meaningful way, led by technology and AI-driven names. The Dow was up about 1.75%, S&P up 1.25%, the Nasdaq was up about 1.5%. Now let's put that full week into perspective. It was a strong and broad-based move higher. The Dow was up about 3%, S&P up about 4.5%, and the Nasdaq was up about 6.5%. Technology and consumer discretion led the way, while energy lagged as oil prices declined sharply over the course of the week. Now let's step back a little bit. Markets rallied on three core drivers: easing geopolitical risk, supportive inflation data, and solid early earnings. But this is important. Not all markets are confirming that optimism, which is something to keep in mind as we move forward. Now let's look ahead into the week to come. The biggest focus this week will be on the consumer. We will get March retail sales report tomorrow, and expectations are for a strong headline number, driven in part by higher gas prices and auto sales. But when you adjust for that inflation I just mentioned, Goldman Sachs is actually expecting a decline in real retail spending, which suggests the consumer may not be quite as strong as the headline numbers imply. That's an important nuance because it feeds directly into the broader question: how much pressure is the consumer really under? We'll also get additional data later in the week, including jobless claims, PMI readings, and consumer sentiment, which is expected to remain relatively weak. That's another sign that confidence hasn't fully recovered. From a policy standpoint, it's a quieter week. Fed officials are in the blackout period ahead of the next FOMC meeting, which means no major commentary to guide the markets in that realm. So we will see the confirmation hearings for Kevin Warsh, and that will be closely watched. On the earnings side, things begin to ramp up meaningfully. We'll hear from several major companies, including Tesla, Intel, and some key airline names, giving investors more insight into both corporate demand and forward guidance across sectors. And of course, geopolitics remains in the background, really in the foreground. The market is, as you can see today, the market is clearly priced in progress in the U.S.-Iran situation, but it will need continued follow-through to justify last week's move. So as we think about the week ahead, here are three themes to focus on. First, confirmation. The market's moved aggressively higher, and now it needs support from earnings and economic data. Second, the consumer. Retail sales and sentiment data will help determine whether spending is holding up under inflation pressure. And third, sustainability. After a rally this fast, it's natural to see some periods of consolidation, even within a longer-term uptrend. As always, the key takeaway is this: markets don't wait for certainty. They move ahead of it. Stay focused on your plan, not the noise. Have a great week.